Hello, West Pacific Market Analytics, and it's Glenn here with the monthly long-term perspective. I'm going to take a deep dive here, take a look at the market. And what I want to do in this monthly report, we're going to try to start going outside of what we typically look at in the weekly and the daily. I haven't come out with many dailies this week as there's really not much to show. I've got one model I want to show you around this top out. I think we're done here, pretty close. We've got a 61.8% retrace in both the index and in the pattern. And I'm going to show you that one model. We could very well be done. So we'll see how it looks as we set up into Monday. And it could get aggressive here soon. So we're going to look at that. A lot of stuff going on out there. A lot of data talking about how awful this whole tariff thing could be going ahead. But I only care what the data is going to show, because I think the tariffs are just an excuse to the top out more in the velocity. And I want to show you what I'm talking about there. Now, I'm also going to be putting together a slide deck on this presentation that's going to be focused on this thing called the fire economy. And so I'll be putting that up on a link over on my Twitter account. If you're interested in that, go over there. I'll probably have that out sometime next week, a slide deck around this video today with some of the models we're going to be discussing here. Again, you want to get a hold of me, Discord memberships, podcast speaking, and I'm also looking for consulting contracts with the family offices out there, pension funds, or any financial organization that needs data modeled or needs reports put together in a slide deck presentation. We can get that done. We can use these data models and pretty much plug and play into any sector, into bonds, into pretty much everything, into currency, into commodity, you name it, it can be done. So get a hold of me, destinytrading@gmail.com. Now let's not waste a lot of time. We got a lot to look at. The disclaimer, please read it. These charts and updates are for educational and entertainment purposes only. And then let's get right to it. All right, here we go. Let's start out. I want to start out with some technical models to kind of set the tone first. So let's go up into some of these. Let's take a look. Didn't close that out. Let's close that out so my members have some privacy here. And then let's dig right into these. Right here, let's go. Okay, I want to go here into some of these studies. So we're going to look at some long-term signals here. So you can see in this first model here, you notice this signal going all the way back to 2014 here. You notice the signal just coming down, coming down, coming down, coming down. And then finally right here, we now have a turn in the signal right here at the start of the year. So the signal's rolled up. We want to see above here. Let's click out of this. We want to see above here. Let's go from a closed position to this trend opening up above to get above the dark blue gate here. But we have the first turn in the signal, so that's really important. So that's showing us that something major is starting to take place here, and that's what I want to show you. Here's what's important again, because again, I truly feel that the issue around tariffs have nothing to do with this. That's just the excuse. You know, there's always got to be an excuse for why the market's topping out or why the market's selling off. And I'm going to show you that the fire economy has a lot to do with that. And we'll talk about that after. But right now, here's the market advancing model. You notice that the momentum of the velocity here topped out all the way back here in early to the second quarter of 2023. And you notice the liquidity, the velocity has continued to drain and is now starting to get pretty aggressive here. Notice not only the blue here showing the drain in the liquidity, but notice the trend draining as well. Okay, so we're now getting below the gate here and price is still hanging up above here. It can't do that, okay? It's all the way at the top of the mock channel here. It is going to start to dive down here as we head forward. Now, we are looking for potentially an aggressive move that could take place over the next couple of months, and that is definitely in the planning. So we're going to look at a model around that later, but you can see here we cannot go any higher, and the whole tariff situation has nothing to do really with what's going on here. You can see this global model, big picture. This is covering the entire globe. And you notice here, you see how here's this indicator in red. Here's our markets here in blue. You notice this top out here at the top of the mock channel, all the way back here in 2014, the corrective move. Again, nearly the top out here on the channel. This little choppy corrective move here in 2018. Again, the top out here on the channel. You notice we didn't even get a top out on the channel. This was just part of the ongoing segment here on the 2020 move. Again, the top out on the channel for the 2022 move. And again, the top out of the channel right here. Now, we're going to want to watch, obviously, the velocity start to come down here. The trend is flat. We need to see it roll over. So we're peaking out here on everything. Now this is the global model, so we can start to drop before this even turns out. But you notice our signal here, it's right back up to where it's topped out all 4 times in the past. And that's the global model. And again, here's the compact advances. We can see this long-term process of the topping out of the velocity, 1 year, 2 years, and now going here in 2025, it's finally starting to crack. So it's literally taken 2 full years for the velocity of the momentum. You can see here's the top in the momentum based on our channel, right? So right here, momentum's coming up. We had a bear cross all the way back here, forming this channel where we need to price into. And you can see the momentum slowly now starting to come out. We can see the velocity starting to crack. So we got a momentum top, we got a velocity top, and velocity still coming out. So this is a major top we're talking about here. And we're going to watch to see as this velocity starts to come out. Now here's a signal model. You notice every time we got down here, the signal held, the signal held, the signal held, the signal's right here. So we're going to want to watch as this signal comes back down here in 2026. We're going to get the sell-off, and then we're going to see what the signal wants to do. So there's a lot of things that we're going to need to watch ahead. Now here's what really gets me worried about this market, and there's quite a few models like this I could share. But you can see here this particular indicator was all the way up here back in the late 1990s. And then look at how it just started to drain away here. And notice once it started draining away and got down closer to the price, this is where we had our big corrective move in 2000 here, coming down with this indicator. Then you notice the indicator went sideways. We rallied back up. The indicator continued to move lower, and then we had our 2007 move. So notice this down move, sideways and down move, and the market down, up, down, and then it all built up here. Look at it coming right out of the low here in mid-2009 and has built all the way back up to right here. And then you notice when it stopped moving up here, we had our first corrective move here in 2022. But notice this has continued to roll lower while the market rallied back up here. Now, that's not a healthy situation because, when has this indicator ever been wrong other than right here? Never. And you notice the trend's now starting to roll back over. This is now arrived here to the collapsing gate, and the trend remains closed below, open below here, saying this is ready to start moving lower. So this is, you just can't price up here. This model's never been wrong. So there's just things there that really bother you when you look at the structure of the model. And again, this is the same indicator. You can see our momentum top of this particular indicator topped out right here in 2020. You notice the 2020 move was right here and momentum was topping out. But since we were down here, we still needed to rally up in the trend here. You see the red dots as this thing continued up. And then you notice we had the high here in the red dots, 2022. We corrected down back into the V channel. Look at that. But notice now that the dot curve is rolling over. The trend is rolling over. We can't stay up here. This is ready now to break down. And if you look at this red, it needs to price between here and down here into this thing I call M equals A. Now, M equals A is a long-term pattern that took all the way back here in time to 2000. This whole pattern is what I call an M equals A pattern. And this is not pretty because this is all got to roll over. The market simply cannot be up here. It is heading lower, and it is going to be a very aggressive move lower. So we're going to have to see how that develops. Same model again here. You know, it's just kind of trending sideways. The trends come back down, and look, we're right here with everything's all met together at this junction, ready to continue to break down. So this next move is setting up to start to take us lower. We're looking at some other models there I was sharing here. Let's take a look at this one. You notice here, this is a big quarterly model here. Notice the signal's rolled down, and it's still bearish. And notice we had this signal roll down at the top in 2022. We had this signal roll down in the 2020 move. We had this signal move down in the late 2018 move. And the signal has now rolled over and is still below with a negative trend bar down. So we can see that something major is definitely going on here. And again, we can see that same signal. The signal is still down. The trend bar is actually hit another new low here. There's nothing pretty about this rally back up. This was simply a bounce move to take us back up to the norm. And you can see right here in this particular model, you notice how the red indicator topped out here right on the dot curve. Here's the dot curve. We were able to break out above the dot curve. You notice the signal has rolled over here, very bearish. So there it's rolled over. You notice when it rolled over here, it rolled over just before the 2022 top. And you notice again, it topped out right here, and it rolled over here at the 2020 top. So this has now got a price back down here. And you notice how nicely this red has followed the market. So again, we are ready to go lower. Another model here, you can't price up here. You need to start to price back down here into the V channel, into the trend. This whole pop out here, you can justify this because this particular technical model, there's other ways to look at it, but you just can't be up here. And we can look on that. We can look at that so many times that it doesn't matter. So there's just so many different. And here, look at this parabola move, okay? In the long game, parabolas always end in tears. And you notice this correcting down here, and this big correction down here, and then you notice how this thing has now gone parabolic, right? Absolutely parabolic. Parabolics don't just continue to go to the sky. At some point, they finish, probably finishing off right here, and then they collapse. So a parabolic move is not something we want to see. Now there's this swan of death harmonic in play here. You notice we have a smaller harmonic here, and then we have a second harmonic here. This is a swan of death harmonic, a double triangle formation. It's got a swan formation of the entire pattern. Lower leg here from this low in 2002. We got a major, extremely large harmonic swan of death here. And you notice that the V channel's down here. You see the V? Here's our momentum topping out here all the way back in this model in 2018, 2019, and we're just chopping around up here. I will be posting these models to show you. Now here's the model that bothers me the most. Whenever you have a rule of 3 in the ending 300-year cycle, here's our top in 1929, here's our second top in 2000, and now here is our third top right here in 2025. Now you notice we hit that channel absolutely perfectly at all three of these points. This is a rule of 3. Not only that, but you notice we came at the low here in 1932 at the pink. You notice here we did not get to the top of the black line trend, and here we finally hit the black line trend. The rule in the model is you go from the pink and you rise up to the black. Now this is definitely a very aggressive looking triple top. We've been in nothing but buy the dips since the low in 1932. That is an awful long time. And everybody's saying, no, it's going to continue to rise, it's going to continue to rise, it's going to continue to rise. Well, we'll see if that happens. Let's go over here into, let me see if I could put that model that I put up here. Hang on, let's just go in here. Here we go. Here it is right here in the chat board, talking to the members about this. I want to talk about this real quick, and then we'll go over into the fire because we're going to run out of time here. This is just going to be a long video today, and I'm trying to talk fast. But you can see here in this formation, here's the pattern. This is the 3 peaks pattern. And so the 3 peaks pattern had a top right here in June of 2024, and there's the head formation, and here's the head formation now, left side. We are now on the right side of the head formation on both the 3 peaks pattern, and we're now on the right side of the high of SPX. Now you notice what's happened here. So if we take the pattern here, we had a sell-off here, which we could label an A wave low, and then we had this very extended flat for a B wave, and then we came down here, and now we have started in the C wave. So here's your 1, and then here's your 2. Now notice on the pattern, our 2 wave up has gone above 61.8%, and you notice also on SPX, we've risen up to 61.8%, just above. And you notice how red is stopping right here on the trend. You see that? I mean, it's done right there. I don't think it's going to rise any higher. You notice up top here, it stopped right on the trend, and now it's right up to the trend here. This move looks done. I'm expecting a down day starting on Monday. And I think the count here off of the head, I think I want to label this an A, and then a B, and then a C move lower. Whereas this count, now the C wave will also be 5 waves lowers. And then on the pattern, we got a 1, a 2, a 3, a 4, a 5. So we're going to see how that works out. And we're going to be running this model, but it looks really, really solid for a completed pattern here. Now let's run over here and let's get into this fire idea. So remember, the term fire economy is sometimes used critically to highlight the dominance of the sectors finance, insurance, real estate, and energy in developed economies. And it's often at the expense of manufacturing or other industries. And critics have argued it fuels inequality as wealth concentrates among those controlling financial assets or property. So the people that benefit are anyone that hold the assets. Everyone else gets left behind, and it fuels inflation. So it's just not an equitable system, and it's very, very bad because it fuels bubbles. In the U.S., fire sectors have grown significantly since the 1980s. They contribute to GDP, but also linked to economic bubbles. So again, that was all about the 2007-2008 housing economic crisis, because we'll talk about that a little further as we start to look at these models. You know, the problem with fire-based economies, and it's interesting because it's actually the largest sector. If you take out energy, it's 20% of GDP, just finance, insurance, and real estate. You add in energy, it's 23% of GDP. And the second largest sector or contributor to GDP is healthcare at 18%. So it is the largest sector. So if we go into it, we're going to start with the F and the finance, and you can see here in the finance model, finance is now rolled over. The trend is getting very aggressive to the downside. So you can see that when this happened before, here was the 2020 corrective move. Here was the 2022 corrective move, and now here we are in the 2025 corrective move. So finance is rolling over and on its way lower. And you can see we've got a long-term signal. You notice right here, the signal last went off at the low in 2009, and the signal has now rolled over up top here, 2025 signal rollover, and we've got a bear crush ongoing here. So this is, I'm going to be posting all these models so you can take a look at them in a slide deck. It'll be easier for you to see. Now, there's a big problem in the banking model because you notice here, here's our banking model. This is the SIVP debacle. You notice the big corrective move here in blue in banking. We had the first big move down here in 2020. There's the big crack right there. Here's the banking crisis in 2008 to 2009. And you notice now here the liquidity has completely drained away. Notice here how the liquidity is completely drained away here, and the trend is now rolled back over. So it's interesting because the trend was up all of 2024, and it's now rolled back over. But look at this drain in liquidity. And banking and SPX are hanging up here. I think something's about to happen in the banks. I'm going to take a look. The one that's benefited the most from all this, of course, is the broker-dealers. The broker-dealers have just been on fire. Look at this, just up. The black candles are the only thing that represents a bear market. And the broker-dealers are they've just done phenomenal. They just profited so much from this. And there is just probably so much under the hood with derivatives and leverage. It is probably at a level that you don't even want to know. And you can see the global finance. So we're looking everywhere, including outside of the U.S. Again, you notice this hit on our pink line, right? So back here, we had a pink line hit in 2018, and there was that corrective move, right? You see it here. It was our first corrective move. Here was our second corrective move. Velocity continuing to build. Now, velocity looks to be topping out, and we're topped out as high as you can go here again on the Mach curve. That is in global finance. So it doesn't, it obviously looks like it can't go any higher. Same thing here in the European finance. Fully topped out up top now. It was topped out back here, and the same idea. And you could... So we're going to be watching the trend here and see if this is the end here, because we're going to see it in all these models. Here's the S&P insurance model. Again, you notice the trend, the Mach curve going flat here, and we're topped out all the way up top. Everything is topped out, peaked out as high as it can go. Let's go into the insurance model. You see the momentum curve here is rolling over now. That's the first time we've seen this roll over since the low in 2020. You see the curve just rising up, and now we're seeing the momentum of the trend start to drain. So insurance actually is one of the stronger looking sectors. I will give it that. I mean, insurance for sure is something, I've just put up that one model here. I've got S&P insurance, and I've got just general insurance, and this insurance model here. You can see this head and shoulders formation up here. And again, we're going to want to see how this starts to drain, right? Same idea. You notice the drain here as we're coming down to this corrective move. But insurance is still looking, it's looking pretty strong. So we're going to want to have to watch how that goes. Now let me read this. The fire economy, it contributes to economics bubbles due to its reliance on leverage speculation and interconnected risk-taking, which amplify the price distortions. You got excessive leverage, you got speculative behavior, you got financial innovations like derivatives, and of course mortgage-backed securities. You've got the interconnectionists. Everything today is being driven obviously through the robots that are trading this market, and you just got a lot of feedback loops. Rising asset prices from fire creates wealth effects, encouraging more borrowing and spending, which again further inflates prices. Doesn't that kind of sound like we're at right now? So that's what this is all about. It creates bubble dynamics. Now, real estate's really got me worried because you can see here again the 2020 move. Here's our 2022 move. You notice the trend draining, the velocity trading, and here we are now, right now. Here we're priced up here. You see the red indicator draining, you see the trend draining, you see the velocity draining. So real estate is looking not too healthy. And this is the one that has me very concerned because you just see this absolute liquidity drain throughout 2024 in real estate. But why we've been able to go higher is because tech and semiconductor and AI and all the rest has pushed price up, while the underlying U.S. real estate liquidity has been doing nothing but draining. It really is ugly. Here's the U.S. real estate. Notice the top out right here in 2023 of the momentum, and the V channel's down here now. This all needs to break and price all the way down here into the rest of this year. So this is setting up for another aggressive move down in the real estate sector. It does not look healthy. You can see the global real estate. Look at this huge curve ongoing here. A shoulder on this side, a head up here, a shoulder. Look at this giant head and shoulders here in the global real estate. You notice here coming down, testing right here, squeezed right in here. Notice the compression. And this is getting ready now to all start to roll down lower. And that's what it's looking at, because you can see this moving down. You can see this all starting to trend down. We're going to watch to see if that wants to start rolling over into this very large head and shoulders formation in the global real estate market. So you got to be careful here. Home construction, look at this just absolute collapse in trend. The gates now opened up below. We had it open here back in the 2022 corrective move. And now we're getting compression and squeezing here in the home construction area. As long as this trend stays down, this is all going to continue to drop lower. And the nail trade has been phenomenal, right? Shorting the home builders has been good. I don't think it's over. I think this is ready to start breaking down lower. I think home builders are looking very precarious. And I wanted to show you this model about mortgage-backed securities that I put together. This is modeling the mortgage-backed securities. And it looks dangerous because you notice here's our V channel down here. I want to see what happens here. We've had it all. Look at how it's all just rolling over. We got a triple top here. The blue is what we're modeling. Here's the market in red. We just finished the triple top here in 2025. 1, 2, 3 on this downward channel, right? This looks ready to now collapse. Looking at that banking model and looking at these mortgage-backed security model, this is showing shades of 2007 all over again. And here's another one of the mortgage-backed securities. Look at the liquidity just draining here. The trend is negative, and the trend has been negative since early 2023. There's something under the hood, and we're going to find out shortly. Now let's go quickly. Let's jump into the final thing here. The energy sector. Energy's still been strong. You notice though now energy is starting to finally break. You notice how it rose up right out of 2020 and is held up fairly strong above. It's been a nice safe haven. A lot of money got parked in there, but I am calling the energy trade over. It is ready to crack and it is ready to start heading lower. It is set up. It is primed. We have shorted via Doug. And we're looking at some other angles to short energy. It's going to take a little bit longer. There's our signal. Notice our signal's turned over right here. Our signal low in 2020. Our signal high here in 2015 when we had that big crack, obviously, in energy. And this is setting up. Look at it. Here's where it's priced, here's where it's priced, and here's where it's supposed to price. It's supposed to price right here, and we're up here right now. This is going to crack down here into 2026, potentially 2027. So energy trade is done as a safe haven. It is finished. Look at U.S. oil and gas, right? Look at this. Velocity here, number 1. You see this big velocity balloon. Velocity balloon number 2. velocity balloon number 3. And now what's interesting is you notice U.S. energy, oil, and gas in blue was always up here while the market was down here. Now, when it corrected here back in 2007, 2008, the market corrected with the U.S. oil and gas. And then you notice this here, though, after that, it's always stayed ahead. And then it caught up with each other, and there's where we had that huge crack when the COVID crisis hit in 2020. But look, it was already collapsing before COVID came in. To me, COVID was just an excuse to print again and keep this bubble going. But I'm not a total believer of that because, again, we needed to have that triple chop hit on that other model we looked at. But what's different this time is we have the SPX priced with oil and gas, and we've never had that before. So now if oil and gas starts to crack, and look at the velocity just absolutely draining here, this is done. You do not want to be long the U.S. oil and gas sector. It is absolutely setting up. Now, Europe's still a little bit strong. The velocity is rolling over. The trend's breaking. So I want to keep an eye on the Europe oil and gas sector. You can see that it cracked very well back in that 2018 to 2020 period, but it has rolled over. So we're keeping an eye at. And the global oil and gas, same story. You see the drain here in liquidity. The trend is draining, and we had that same look back here. You see the drain in liquidity, drain in liquidity. Now, liquidity is not quite as drained, but it's still, we can't price up here. It's going to take some time. This is going to have probably a corrective move down, down and around here, and then rally back up and then lower. So we're looking at like a down, up, and then down, lower. So, it's not, I'm not calling it any kind of crash move. I'm just talking about this all getting back down here into the 3,000s, then a rally back up to next year, and then we'll talk about that after. So right now we're just looking at this corrective move because it's all priced in here. You notice here, global oil and gas, look at us priced up here, right? We can't be up here. And here we are down here in the V channel. The V channel's topped out. Look, it's topped out on dock, and this is all ready now to start rolling lower. So it's going to pull down the price. We can see that in a lot of the models. You can see it right here. Look at this energy model. Look at it coming down. Dock curve, momentum topped out back here in 2021. XLE here, you see it XLE in red. Look how it's topping out. We're going to watch how fast now this trend can break. Here's that big break we had in 2020 as the trend built down, and then the trend built back up, and it rallied right up to the curve here. So we're going to want to watch this closely, and we'll be looking at this throughout the year to see how this sets up. But we are, every model I look at, we are done. We are topped out. We are topped out. Now here's a model of natural gas. Natural gas is topped out. It's heading lower. There's no trade here right now. It's kind of trapped here about 355. A little bit of room above maybe to move back up to 4. But in general, it looks like it wants to move lower here for the rest of the year. Slowly, there's still room above. This is not something you want to be trading right now. It's pretty complex. There's been some good trades here, but right now, it definitely is not going anywhere. We're not going to see any explosive. And here's the crude oil model. You notice back here when the signal was closed, we started to come down, then we traded sideways, and then we had that collapse move. Well, the signal has now closed. You notice that the pink line mock here is pricing 15. The pink line mock was over here when we had the big crack. So this looks ready. I mean, we could see an aggressive. I heard OPEC is increasing production, which is really interesting. That's saying something underlying. And you notice this thing just looks ready to roll over here. It just, we've topped out of momentum. We've been trapped up here in this little wedge here because the gates held us up, and the gate has now closed, allowing us to drop below. So this is going to be interesting to see. I mean, crude oil is definitely going lower. We're going to have to see how fast it wants to do that. All right, let's see where we're at. We're running way long on this, so we're probably going to have to cut out. I wanted to show you some of the yield models here. Just quickly, the recession model. Recession model's building. We are probably within a couple months, potentially, of the recession model signaling. It's starting to break. This is starting to roll over. It's got the same look of the past recession signals going off here in 2000 and back here in 2007. So we're getting pretty close here. We're not far off from the recession now. We could have it within a month. We could have it in 2 months. But I don't think it's going to take us much longer than that. I was talking bonds there. I don't have time for that. And let's not get too much. I had a couple other things there, but I think we're going to cut it off because we're just running too long. So let's cut it. Again, I'm going to put together a slide presentation of some of these models for you to view. Thanks for tuning in, and let's get out of here. Len out.